We had some encouraging data out of New Zealand yesterday with Westpac's Consumer Confidence Survey for the second quarter showing an encouraging bounce back after the understandable plunge in the wake of the Canterbury earthquake earlier in the year. So we've seen consumers feel a little bit better about the outlook ahead, and it was the same for businesses within the Business NZ PMI, which is an index which provides a good gauge of activity in the months ahead. So they were both positive and encouraging, which contrasts to the news from offshore, which was pretty concerning if we look up at the European situation in particular. Focus there continues to be on Greece. They've got major fiscal problems up there, but if you look at the politicians, well, sometimes you think they're like crew rearranging the deck chairs on the Titanic as they grapple to deal with the issues, and the market continues to price in a Greek default. Yields on Greek bonds and some of the other troubled European economies, the yields really rose to very, very high levels, while the safe haven German bonds and US Treasuries rallied as investors moved their money into those safer bonds. We also saw European shares drop, but US shares actually managed to eke out some small gains towards the end of the session. Now in the US we had some reasonable data for the housing market in terms of building starts, which beat pretty weak expectations, but they still came in slightly stronger than expected, and their current account was slightly narrower than expected as well, the current account deficit. But what was concerning there is we had another regional manufacturing survey which just pointed to weakness for the manufacturing sector in the months ahead. In fact, the Philly Fed region index, which was at very strong levels only 3 months ago, is now back to, some of the indicators are back to the weak levels we saw back in 2008 when we were in the depths of the downturn. So concerning data there, but the US shares managed to push out some small gains. Now in that weak environment, it's no surprise to see the New Zealand dollar off a little bit. We dipped briefly below 80 cents against the US dollar. We're back above that level now and look like we're finding a bit of support. Not much in the way of data for us today, but we do start to get more data out next week, with the manufacturing survey for the first quarter being the main focus on Monday.